In trading, the only thing standing in the way of you making money isn't the market, it's you. I stood in the way of a very profitable day in the market, but I'm going to show you how I plan to avoid these mistakes in the future, and hopefully you can implement them too so you don't make the same mistakes that I made. And if you're a struggling trader, I'm going to tell you the best piece of advice that I've gotten about getting out of your own way. Trust your strategy. You have got to come into the market every single day with the strategy, and I always like to come into the day with a pre-market plan that I've already thought up of before the markets even open. That way I can follow my plan. I trade using supply and demand, and I know before price gets to where I want to trade, I already know what I'm looking for out of the market. I already know where I'm going to enter. I already have a criteria of what I'm looking for the market to do. I know what I'm looking at to exit the market when the market goes in my favor. I know where I'm going to be wrong and how much money I'm risking in the trade. I've back tested my strategy. I've forward tested my strategy. I've paper traded it. I've live traded it. I've done combines with my strategy. So I know my strategy works and I trust my strategy. However, sometimes your emotion gets in the way and you have to be able to block all that out because you know that your strategy is profitable and you're the only thing that's getting in your own way. Most of the time, people mess up the strategy is not messed up, and then people do the ultimate mistake, which is hop from strategy to strategy to strategy, and they never find profitability because they never stick to one strategy. I've been trading supply and demand now for 1.5 years, and I have not switched once from the strategy. That is my core strategy. Yes, I have added or subtracted from the strategy and added different little things into the strategy to make it my own, but my basis for every trade comes from supply and demand. The power of walking away. If you're an emotional person and you can't handle watching every single bar move up and down on the charts, it's okay. You have the power to just walk away. It's easy. Watch.
A few moments later.
And then you come back and you can see where your trade is at. The thing is that having a stop loss will ensure that you're not going to lose more money than what you're willing to risk. So once you set your stop loss, that's it. You can let your trade play out and you physically get out of your own way, and you can't control what happens on the charts anymore once you're already in. All you need to do is let everything play out the way it's supposed to. If you get stopped out, that's fine because you trusted your strategy, you're in a good trade, and you removed yourself from the situation. You literally got out of your own way. Now, some people might not be able to get out of their own way, so not watching your P&L is another great way to remove yourself from the situation, because a lot of emotion comes from seeing the price go up and down and your money go up and down, and you'll find every reason in the book to hit that sell button. So instead, if you just close your screen and you don't watch your trading screen at all, because most of us, we don't trade on the same screen that we chart, or at least I don't, then you can't actually act on what's going on in the market. And on top of that, you're not going crazy because you're up $100 and now you're back to break even, and then you're back to $100 and then you give it right back, and it's an emotional roller coaster. So if you just close your screen and you don't watch your P&L and you're only focusing on the chart, then you can't act and you just allow the market to play out. This has probably been one of the biggest changes that I've made to my own trading that really helps me to not make impulsive decisions. By just not watching my P&L, it removes a ton of emotions from the charts and from my trading in general. Sizing down. If you're a struggling trader, you need to size down. You may be in too big of a size and you just can't handle the losses and you can't accept the full risk. Shout out to Carmine Rosado because he's the one who taught me this, and honestly, it's game changing. If you can't accept the risk, then you can't let the trade fully play out, and you're going to be too focused on how much you're going to lose or potentially on how much you're going to gain, and you just can't handle it whatsoever. But if you size down and you see your trades continually work out, you see that I'm continually getting that 30 points, getting that 40 points, whatever you're going for, then you can start to size up with more confidence because you're, oh, wait for it, trusting your strategy, right? It's a process, and it's way bigger than just the profits. The profits will come, they will, but you have to trust the process, and the process lies in your strategy and not being oversized. Make sure you tune into our live stream every morning at 9 a.m. EST, Monday through Friday. And if you like the content, please hit that subscribe button. I'll catch you on the next one. Peace.